Fed Chair Jerome Powell let slip one very important detail during his Q&A with the press last Wednesday. And although it was a very subtle slip, it was one of the most brutally honest things I've ever heard Jerome Powell say. And it was so significant that every single American who earns a wage should be fuming at him right now. And every single politician in this country should be demanding his resignation. Let's listen to this clip here and see if you can spot what it is.
I wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet. But the whole point is, once you see it, you have a serious problem.
Now, in that clip, Powell was asked if he agrees with Fed Vice Chair Lael Brainard, who said that she saw no sign of wage spiral inflation. And Jerome Powell agreed, saying he sees no sign of wage spiral inflation, which, if you understand the significance of that, should have you saying, then what the heck is the Fed up to right now? What the heck is it you're trying to pull on the average person? Now, there are varying definitions of wage spiral inflation, but this graphic kind of sums it up pretty well. When the cost of living rises, wages tend to rise, and when wages rise, people have more money, and therefore they spend more money, and that generally causes an increased demand for goods, which leads to even more higher prices and even higher cost of living, and this is a vicious cycle that goes around and round. In other words, a wage spiral inflation means when people make more money, they spend more money, and that causes inflation, and therefore, in Jerome Powell's eyes, the way you fight inflation is by making sure people make less money. And while he'll never come out and say that because it would have people up in arms, that is exactly what Jerome Powell is trying to do with his interest rate hikes. He is trying to slow the economy down by causing increases in unemployment. And if there's an increase in unemployment, then there's more labor than there is demand for labor, and therefore the price of labor goes down. He's trying to interrupt this circle. So Jerome Powell said he sees no sign of this. Now, he would go on to say by the time you see this, in his opinion, that would be too late. But it's important to note that Jerome Powell said this is not happening. And if that's the case, then what the heck is Jerome Powell doing? Why does he continue to raise interest rates to try to increase unemployment in order to prevent this if he already said there's no sign of this? And the reason why Jerome Powell is doing this is because of something called the Phillips curve, which is what we're looking at here. This is a gross oversimplification, but the Phillips curve is one of the tenets of Keynesian economics. And it's basically a belief that there is an inverse relationship between inflation and unemployment. In other words, if you have high unemployment, then you must have low inflation. And if you have low unemployment, then you must have high inflation. And so based on the Phillips curve, what Jerome Powell is trying to do makes sense. He's trying to increase unemployment, and that would bring inflation down. But there's just one problem here. The Phillips curve is bullshit. It doesn't work. As anybody who lived through the 1970s will tell you, it is absolutely entirely possible to have both high inflation and high unemployment. That's a phenomenon known as stagflation, and it's just about the worst possible economic scenario you could ever find yourself in. It had a lot of Keynesians scratching their head, and so they came up with this brilliant philosophy. When the economic conditions observed no longer fit your bogus theory, they came up with the brilliant philosophy of just shift the curve. Brilliant. Why didn't I think of that? Now every possible point on the Phillips curve is basically every single location on the entire Cartesian plane. This was the best response that Keynesian had. But the problem wasn't that they needed to shift their curve. The problem was their curve just didn't work to begin with. It never has. And it was the Austrian economist Milton Friedman who said it best: inflation is always and everywhere a monetary phenomenon in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in output. Now you'll notice nowhere in here is he mentioning unemployment. He's mentioning the qualifiers of the quantity of money and output. That is where you get inflation. And what did we see in 2020? We saw a massive increase in the quantity of money, and we saw a massive decrease in the output when everybody was locked down. The inflation we're living with right now was not caused by unemployment being so low. The inflation we're living with was caused by a massive expansion of the money supply and no corresponding increases in productivity. So this wage spiral boogeyman that Jerome Powell is worried about, it doesn't exist. And as it turned out, it's never existed. The United States has not seen wage spiral inflation ever. It has never happened in the history of this country, and it definitely is not happening right now. And as always, the answer lies in the economic data. Check this one out, released just last week, United States non-farm unit labor cost. This is the wages of the average private sector American. Unit labor costs in the U.S. non-farm business sector increased by 1% in the fourth quarter of 2022. But while Americans were only getting a 1% raise in their wages, take a look at this one, United States non-farm labor productivity. Now this looks at the economic output of every hour worked. Non-farm business sector labor productivity in the United States increased 3% in the fourth quarter. So Americans got a 1% raise in the fourth quarter, but their productivity increased by 3%. That means that America's business owners got 2/3 of the increase in productivity, and only 1/3 actually went to the workers. Folks, that is not wage spiral inflation. That's the quality of life of the average wage earner going down, while the overall wealth of the ownership class, the elites ruling this world, goes up. And that is nothing new, folks. That has been happening in this country for more than 50 years. Check this out from the website. WTF happened in 1971. What you're looking at here, the red line is the compensation for the average employee, and the yellow line is the economic output or the productivity of that employee. And you can see the two moved hand in hand since 1948 right up until 1971. And starting in 1971, the compensation of the average American was basically flat for the ensuing 50 years, but look at the productivity of the average American during that same time period. This is the wealth gap in the United States right here, folks. This is why the 1% has all the wealth, and the rest of us, no matter how hard we work, no matter how much overtime we put in, we will never escape into those upper classes because the deck is stacked against us. Now, you'll notice this started in 1971. Greed was not invented in 1971, folks. Contrary to what Paul Krugman or Robert Reich will tell you, everybody didn't suddenly get greedy in 1971 or in 2020. No, greed was invented the first time Australopithecus or Cro-Magnon man grabbed a rock and bashed in his neighbor's skull and took all the cool stuff in his cave. Greed does not explain the inflation that we're seeing, and greed does not explain the declining standard of living of the average wage earner in the United States. What happened in 1971 is when currency debasement became the monetary policy of the Federal Reserve and the United States as a whole. That is when the U.S. went off the gold standard. And ever since 1971, even though the productivity of the average American has increased, his hourly compensation has not. And that's why life keeps getting more expensive, and why people who are making salaries that used to be considered rich when we were kids are now living paycheck to paycheck. Fact is, there is no wage spiral inflation in the United States. There never has been, and Jerome Powell's own words show that to be true. So why then does he continue to raise interest rates? Why is he on a mission to increase unemployment if unemployment has nothing to do with inflation? What Jerome Powell is doing is he is repeating this cycle that has been perpetrated against Americans year after year after year since 1971. First, they expand the money supply. When they expand the money supply, it drives up asset prices first. The ownership class owns most of the assets, so they see an increase in wealth. Then we get high consumer inflation, which starts to lower the standard of living of the average wage earner. And so the average wage earner starts to demand a higher salary. And that's when the Fed comes in and they slam on the brakes and they put people out of work to make sure those people never get that high salary. And so the cumulative effect after 50 years of this is that the wages aren't rising, but the asset prices and the consumer prices are. In other words, the quality of life of the average person is in decline. It continues to decline while they get richer and richer every time. We don't have a tax problem. We don't have a greed problem. We have a monetary and a fiscal policy problem. And it's the Federal Reserve and the idiots in Congress that are causing it, and the average American is suffering because of it. Fact is, folks, the deck is stacked against the wage earner, and it does not matter how hard you work to earn a wage, you will not get ahead that way. That's why it is so absolutely important that you start a business, that you start a side hustle. Everything from monetary policy to fiscal policy to the tax code benefits the ownership class, the business owner, and that is where you want to be. Till next time, live small and dream big.